Welcome everybody. Wonderful to have you here. Apologies for slight delay. We thought we'd give everyone a couple of minutes after 2 before we actually kicked off. Good afternoon, good morning, depending on where in the world you are, and welcome to the second of 2 webinars co-hosted by Bays and Itad to share lessons from a Compass evaluation on mobilising private finance for climate change. This webinar is designed for an evaluation-focused audience. In the next hour, the timing's planned to give you headlines of the evaluation from the Itad team perspective, with a presentation by the team leader, Charlie Michaelis, followed by some comments from our Bays colleagues, Owen Davis and Callum Bray, on how the evaluation was received. We'll then leave ample time for Q&A. Please post your questions in the chat box and vote for those questions you'd most like answered if you can see that yours has already been posted. I'm delighted to hand over now to Antonia Caldera Saraiva, who's Deputy Director at Bays for International Climate and Energy Analysis. Thank you, Antonia.
Thank you so much, Philippa, and a big welcome to everyone who's joining us today. And a thank you to the whole Itad team who've organised this really valuable series of webinars. Before we hear in more detail about the methods and some of the headlines from the evaluation from the team themselves, by way of introduction, I thought I would just highlight 2 particular aspects of this evaluation, which you're going to hear about, and say a little more about the value that I see in these. So firstly, this was conducted at the level of the ICF portfolio. And secondly, it adopted a theory-based method, in this case, a realist approach. So starting with the scope of this evaluation being applied at a portfolio level. And by this, I mean it reviewed the evidence across a number of our programmes happening in different geographies and different timeframes, each with different specific outcomes related to their own programme level theories of change, but under the same sort of overarching umbrella and overarching ambition of the International Climate Fund. The International Climate Fund, for those who don't know, is delivered across 3 government departments and encompasses over 300 programmes in more than 50 countries. Reviewing evidence at the level of the portfolio has been really useful as a complement to the programme level evidence that we more routinely collect. So scoping this at the level of the portfolio has helped us to identify themes that run across many of our programmes and cross-cutting learning that can be applied much more broadly in the design of our new programmes. And I believe it's really also offered an identified learning of value beyond our own programme teams and has offered value to the wider evaluation community, including other donors and development partners. The value of thematic evaluations such as this is something that many others in the evaluation community are also advocating and talking a lot about. If you attended sessions at the Energy Evaluators in Europe conference yesterday and the days preceding, you might have heard a number of the speakers, including Joe Dickman from the Climate Investment Funds and Mel Slade from the International Energy Agency. They both spoke about their sort of ambition that more of these thematic portfolio level evaluations are commissioned. And one of the things they talked about is that sort of at this level of focus, we can more effectively review evidence on topics like transformational change, market development, or whether, when taken all together, programmes are contributing to a fair and a just transition. The second aspect to this evaluation that I wanted to draw your attention to is its use of theory-based methods. I expect that many of those who are drawn to this webinar today are quite familiar with the bucket of approaches that this encompasses. But for those who are not, theory-based methods are centred around a clearly articulated theory of change. They often focus on understanding what range of levers, what types of circumstance have contributed to an outcome being achieved, rather than attempting to quantify the attribution made by an intervention to the outcome, as might be done by a sort of quasi or experimental approach. Charlie will come on in his next slot to describe in detail the realist approach adopted in the case of this evaluation, and its use of process tracing and also case studies. So I'll not go into those specifics for now, other than to emphasize that this combination of techniques, this theory-based approach, has been an incredibly useful tool for us in unpicking not just what worked and what was achieved, but how and why and for whom and in what contexts. And this is really vital for learning so that we can understand what particular mechanisms have contributed to outcomes being achieved, or what the key characteristics of the context need to be for an intervention to be effective. And breaking down our learning to the specific mechanisms within intervention, or identifying the enabling contexts in which these work best, is really essential if one of our ambitions is often to seek to replicate similar types of outcome within different places and through different initiatives. I've recently joined the public sector after nearly 15 years working on the other side of the table as an evaluation consultant. I felt quite lucky as a consultant working in this space, as I was often delivering evaluations to BAYS, including to the ICF team, which was very open to a wide range of evaluation methods, including theory-based approaches. But I know all too well that's not always the case. And as consultants, you can face pushback, you can face skepticism around the value that they offer. And just to end this introduction, I thought I'd say just a few words about what I think I've learned from working sort of outside and now within government, about how to convince policymakers of the value of approaches such as those that were used in this Compass evaluation that you'll hear more about today. So I really do believe that these are approaches that can offer robust and very practical learning for policymakers. Done well, they'll help break down what specifically about an intervention is contributing to outcomes, supporting replication in new contexts. These are approaches that can be applied to big and complex interventions that might otherwise feel too challenging or simply too messy to evaluate. They're also approaches that do have very clearly defined steps and processes. And as evaluators, I think we must challenge ourselves to more effectively communicate these very clearly so it doesn't feel like a black box. And finally, the findings can also be communicated in a really non-technical way. Most powerfully, I think they help to tell a story about what works and for whom and why and where, and a really compelling narrative. And this should be really appealing to senior decision makers. So with that, I'll hand over now to the team leader for the Compass evaluation, Charlie Michaelis, and he'll tell us a lot more about how they've actually applied a realist approach and what they've learned through this process. And hopefully there's lots of advice that you'll find useful in there too. So thank you very much, Charlie.
Thank you, Antonia. Yeah, it's interesting hearing your perspective on these things, and certainly as someone who's also worked with BAYS from this side of the fence for a long time, I think one of the pleasures of working with BAYS is the openness to new approaches and to really sort of pushing the boundaries of what we can find out and how we can do it. So, without further ado, I shall share my screen. So good afternoon, everyone. I'm going to tell you about the approach we used on the Compass evaluation. As Antonia said, I was a team leader. I worked with a team of 4 other evaluators over 18 months to deliver this evaluation. And I think one of the things that Antonia alluded to is there was massive complexity in the ICF portfolio, which we were trying to learn from. There's £10 billion invested over the last 10 years. It's delivered by 3 government departments, BAYS, DFID, now FCD, Foreign Commonwealth and Development Office, and DEFRA, and there are over 300 programs in more than 50 countries. So trying to learn from this huge wealth of experience and evidence was a real challenge. So the Compass consortium operated from 2016 to 2020. It was Itad and IMC working together on this. And over that time, we delivered 3 portfolio evaluations, learning both from and for the UK international climate finance. And as Antonia mentioned, this is building on a webinar in January that focused on the findings and how they were used. So I'm going to talk about the second evaluation, which was how and in what circumstances is ICF mobilising private finance into low carbon climate resilient markets through demonstration effects. And that fits in very tightly with ICF's aims, which you'll see there on the left, and all really involve demonstration. So demonstrating that low carbon climate resilient growth is feasible, improving the climate finance architecture by demonstrating that methods work, and testing out new approaches to delivering climate finance, and obviously again communicating those. So the purpose of the evaluation was all about learning to support this. So learning about the effectiveness of mobilising private finance through demonstration effects, and helping to improve the future UK government climate finance policies and programmes, and ideally being useful more widely to other donors and to development partners. So as Antonia said, we took an overarching realist evaluation approach, and yeah, the basis to realist evaluation is exploring what works for whom, to what extent, in what respects, in what contexts, and how. And like contribution analysis or other similar methods, realist evaluation takes a theory-based approach, but it has a unique sort of understanding of causality, how outcomes are generated. And that works on the basis that in specific contexts, particular mechanisms are triggered, which then cause outcomes. And those mechanisms are typically unseen things. So they might be the reasoning of participants in a particular process or the operation of a system. And the thinking is that by sort of uncovering that process, you can develop a deeper, richer understanding of how different outcomes are caused in different circumstances. The other thing about realist evaluation is it delivers robust portable lessons because it operates at a middle range. So it's between the sort of specifics of the programs and the broad generalizations of the world as a whole, and trying to fit into a sort of useful middle range of learning. Within that sort of realist umbrella, we used process tracing. The idea of that was to provide a formal assessment of the causal effects, the causal sort of processes that the demonstration effects created. We used quantitative analysis to look at the wider private finance market and identify trends across countries, sectors, and so on. We did a lot of qualitative interviews, something over 100 qualitative interviews, to learn about what action had been taken, why they'd done it, and the role of demonstration effects within those actions. And we did 3 in-depth case studies looking at Indonesia, Uganda, and institutional investors as a market. The approach was delivered in 3 stages. I guess fairly typically for evaluations. There was an inception stage, looking at the ICF evidence base, quite a light touch document review, and the statistical analysis on around about 1,000 investments that were publicly available. And we used that to develop the initial theory of change and to select 20 programs for a more detailed review. And they were chosen on the basis that they'd intended to create and communicate demonstration effects. Then in the sort of first phase of delivery, we did a detailed document review, and we spoke to the people who'd been involved in designing and delivering those programs. That resulted in a revised theory, and we selected 10 programs for a more in-depth study on the basis that there was likely to be sufficient evidence from them to test the theory properly. Then in phase 2, we did interviews with investors, with potential replicators, and with the wider market. We did the process tracing and the realist synthesis, and we revised the theory. And then we produced the final report, which was entirely non-technical. And as Antonia said, it was very, very important. We and the client felt it was absolutely essential to make the report accessible and to be non-technical. And then there is also a technical report, which Nora will provide a link to, which went into all the sort of technical details and is intended to be read by sort of evaluators and people who are really interested in understanding where the results came from. So I want to talk about a couple of things that we felt were innovative about the approach. And the first is, with a theory-based approach, you would normally take the program theory that you were testing, but we had 300 program theories. So that wasn't going to work. And there's also an ICF, an overall ICF portfolio theory, but that didn't deal with demonstration effects. So we decided that we would create a question theory, which was a sort of specific theory that explains how the portfolio of ICF programs intends to mobilize private finance through demonstration effects. And as an example of this, we would then focus it on a particular aspect of the question. So as you can see here, how and in what circumstances ICF mobilizing investment by businesses and developers through demonstration effects. And then this is the sort of high level conclusion we came to on this, where the demand for low carbon climate resilient products and services is unproven and or something about the business model for satisfying that demand is uncertain. Demonstration effects encourage businesses and developers to pursue low carbon climate resilient opportunities because they give them confidence they can succeed and will be able to secure investment. Now, the important thing about this that I want to take away from this is the aspects of the context that were important was that demand was unproven and the business model was uncertain. They were the key aspects of the demand that made demonstration effects relevant. And the way they worked was by giving them confidence that the business can succeed, but also that they'll be able to secure investment. So that really sort of drilled into the sort of crucial aspects of what was making demonstration effects work in those circumstances. The other thing that we felt was innovative was we developed a really very transparent strength of evidence framework for each of our CMOs. So each of our findings was rated as convincing, plausible, or tentative on the basis of whether we could triangulate between program partners and replicators, whether it was supported by different methods, so both the realist synthesis and the process tracing. And although this last one isn't strictly speaking strength of evidence, it's more sort of how widespread the evidence is, but whether it was found in multiple programs or just a few. And that helped us to transparently rate the strength of evidence. We had wanted to include whether there was documentary evidence in there as well, but in fact we didn't find any documentary evidence during the evaluation that was particularly useful, so we dropped that. So this is an example of the output that we produced. This is all in the technical report, which is freely available. And it was dealing with a group of findings about risk, and you can see there's the context, mechanism, outcome at the top. Mechanisms don't have to be split into resource and reasoning, but we found it a helpful way of thinking about it. So what was the resource provided by demonstration effects? What reasoning did that lead to by investors? And then down on the bottom left, you can see the transparent strength of evidence rating, and also where that evidence came from. So the reader can really see what is underpinning this finding, and the quotes and examples there to try and bring it to life. So that's as I say, in the technical report. The other type of output I wanted to show you was, and you're not meant to be able to read this, don't worry, your eyes haven't just suddenly failed, is how we presented the overarching theory revisions. So this takes a similar approach to the CMOs. You'll see the strength of evidence is shown throughout on those left-hand bands, and you'll see we've got in there both the CMOs caused by demonstration effects, and down at the bottom we've got two alternative explanations that were taking place at the same time. So that showed on a sort of side of A4 what was going on. Moving on to talk about the findings and recommendations, and sort of what the evaluation added. So before the evaluation, we obviously asked people how they thought demonstration effects worked, and we got an answer which was basically that they influence risk and return and people's risk and return calculations, which is true, but it's really very broad, and it isn't hugely useful for designing programs or making use of demonstration effects. We found, again, this is probably unremarkable, that different investors need different information from programs, and they'll use that information in different ways. And so demonstration effects need to be communicated differently to different investor types. And so, for example, demonstrating the demand for a product or service is important for businesses and developers who are investing in those products and services. And demonstrating a business model that generates profit is important for businesses and investors in those businesses, which led to a recommendation, which you can see at the bottom there is pretty bland: communicate demonstration effects using the right evidence for different investors. But underpinning that, we provided a tool to help policymakers use the insights in the report to design demonstration effects into programs, so that they could easily identify which were the right insights for them to use for the different investor types that they were dealing with. And that's just, maybe tool is too grand a word, but it's basically cross-referencing where they can find, where users can find the sort of the nugget of information they need to be able to use demonstration effects. So to wrap up, I'm just going to touch on the lessons that we've learned. Firstly, Realist Evaluation provides robust practical learning for policymakers. It can be applied to big, complex interventions, and they don't come much bigger than the ICF. It works well with other approaches like process tracing, and it should be and can be communicated in a non-technical way. But like any method, it's hard to apply well, and it's important to ensure time's allocated for team training, development, and for quality assurance. Further lessons: question theory can be applied when there's no suitable program theory and helps to provide focus on the important learning. And in fact, I've used question theory now a few times since this on other evaluations, and found it a really nice way of thinking about theory development. Addressing the strength of evidence explicitly gives users confidence in the results, and part of the feedback we got from HMG was that it really helped them to say, okay, we're really strong on this, take this on board, whereas this is just an idea, think about it. So that helped the user a lot. User engagement is needed to ensure relevant, usable results. We had fantastic input from Bayes, FCDO and DEFRA colleagues on this. And an iterative approach provides fuller understanding, so going through that phase 1, phase 2, but also it can be frustrating because you have to keep reworking things that you've already done. And finally, the evaluation team needs to devote enough time to synthesis and sense making throughout. And I think one of the things on reflection, although we did involve the client in this to some extent, it would have been great if the client could have been more involved in that process. So that's everything I want to say. I'm glad to see some questions popping up, and we'll obviously come on to those in a moment. But that's all from me for now, and I'd like to hand over to Owen and Callum, who are going to talk about this from Basil's point of view.
Thanks a lot, Charlie. Yeah, sorry, bring my notes up. So yes, just to sort of give a bit of a client perspective, I guess, on the P2 report and working with Itad. And I wanted to reflect in particular on the value of Realist Approach and how the and how we've sort of, that's helped in some ways for this report to have impact within government and in policy making. I'm going to talk about this in quite a general, in sort of quite general terms, and then hand over to my colleague Callum, who is another BEIS monitoring and evaluation advisor, who will sort of talk a bit more specifically about some of the findings in relation to P2, the demonstration effects report. So just a little bit of background, I suppose, in terms of the Realist Approach and why we, I should say that I wasn't actually involved in this report at the very start, but I've spoken to some colleagues who were, and I think some of these points are sort of relevant across government. But just in terms of why we chose this Realist Approach, I think it sort of made sense for the ICF because we didn't have a comparator at the time, and international climate finance in general is still very new, and there isn't that much in the way of international evidence or relevant evidence to sort of make comparisons, which can be useful for learning. And so the Realist Approach enabled us to test our theory of change, which was essentially all we had in terms of being able to examine how effective the portfolio was being. And as we didn't really have this comparator, an experimental approach wasn't really possible at the start, so a Realist Approach seemed more sensible. But I think more broadly, the Realist Approach was really helpful for the type of evaluation that we undertook here, this sort of portfolio level evaluation. And as Antonio mentioned at the start, we do a lot of, all of our ICF programs are subject to some form of monitoring evaluation. Some of them have quite in-depth evaluation activities. But this Realist Approach sort of allowed us to break up the ICF in a way which was a bit different to how we typically did for our program level evaluations, and to explore these sort of persistent issues like demonstration effects, which affected multiple programs. And it sort of could take us a bit beyond the broad kind of judgments about success or failure, and look at a bit more from a bit more of a nuanced perspective about what elements were successful, what were less successful. So on the kind of other end of the report, so the part I've been more involved in terms of the impacts of the portfolio evaluation, I think it has been well received and impactful within the ICF. It has led to some concrete changes in ongoing programming, in terms of, in particular, sort of increased specificity in terms of our pathways to impact. So this is really, a really good example of how evaluation evidence like this can have an influence on, particularly on ongoing programming. But I think one really key point that I wanted to make, and I'm sure Callum will attest to this and potentially reiterate it, is that actually a lot of the impacts of this report has really depended on myself and my colleagues being quite proactive internally in government, because my role and role of my colleagues is really to sort of act as a bit of a go-between between the evaluation research and the policy leads who run these programs and who make decisions about the ongoing strategy and for delivery, and whether or not particular programs should be extended or scaled up. And so it's really dependent on us being quite proactive internally. For example, we ran some sort of internal workshops with policy leads where we communicated the findings to different thematic areas. So this this report has particular relevance for our private finance programs. So Callum and I did a presentation to that policy team, and really focusing on the benefits of acting on the evidence and also the risks of not acting on the evidence. And I think more broadly, there's a point around the particular makeup of the particular relationships between the analytical teams and the policy teams internally. So in Bayes ICF, myself and my other analytical colleagues we have a very embedded model. We work very closely with policy leads, and it's a very sort of collaborative environment in that sense. And that, I think, is quite helpful and conducive to essentially to evidence-based policy making. And then the third point I wanted to make before I hand over to Callum is just thinking specifically about this realist evaluation approach and why that's helpful. In some ways, I think that can be more helpful than large-scale experimental evaluations. And the reason for that, I think, is because RCTs and quasi-experimental designs tend to lend themselves to a bit of an all or nothing outcome. So either a program works and it's cost effective, or it doesn't. Whereas a realist approach, I'm not saying that it can't give us some of those answers, but it also does give a bit more room for kind of mid-level, more sort of practical changes that can be made to ongoing programming and to improve impact. And so in some ways, it's actually easier to communicate those sort of recommendations to policy officials because a lot of them can be actioned without a major strategic decision needing to be made at a senior level, which I think is quite important. So, you can communicate these sort of issues to program leads rather than directors or deputy directors. So it's not, and it sort of isn't the kind of, none of this works sort of advice, which isn't particularly helpful. A lot of the time it's more, you might well consider doing this differently to improve how the the impacts the program has. So that's just some broad points there about impacts, and particularly about the realist evaluation approach. I'm going to hand over to Callum now, who's another MEL advisor in the ICF, who will talk a bit more about the implications of this report for our programs. Thanks, Callum.
Yeah, thanks, Owen. So as Owen said, I work alongside him in the ICF, and I specifically work as the monitoring and evaluation advisor for the private finance and innovation teams. And as Owen's alluded to, in those teams in particular, demonstration effects are really important for our theory of change, and they're embedded within our kind of program method across a wide range of work that we do. And we tend to measure our success or monitor our success against that via proxy indicators. So we look for early signs that can allow us to see how well we're progressing against this. And my role as an analyst and a monitoring and evaluation advisor in this function is to kind of make sure that those monitoring indicators are correct and that we've got the best evidence working against it. So for us, this report, as Owen has outlined, is sort of really important, and it's been integral to my work to kind of make sure it's embedded in what we do. So to give you a kind of an idea about how we've embedded it and how it's been received. So as Owen mentioned, we sort of started by presenting the overview to the whole private finance and innovation team to make sure that everyone was on the same page. But subsequently to that, I've also been presenting to the other analysts within the area, so both other monitoring evaluation advisors and economists, to make sure that we're all on the same page about what the evidence we have is and how we should be going about this. But beyond that, there's kind of been three sort of ways we've embedded it that I think are kind of particularly useful to go over here. So firstly, we've embedded it in our business case stage. So business cases are what we produce when we're coming up with either a new program or an extension to a program, and they justify the need for the program. And we develop a theory of change as part of that. And we've been using this report in our work to make sure that when we're designing the theory of change from those programs, we both target the demonstration effects in the way we intend to use demonstration effects. We target those at the right investors and make sure we're using the right methods for those investors to make sure that we're having the most likely to have the impact we want to, but also make sure that we have those we have the multiple mechanisms needed in place to realize the demonstration effects that are kind of shown by the report. And the fact that this was a realist evaluation allowed us to really clearly understand what those mechanisms are and where they might be realized and for whom they might be realized. And that's been really helpful in designing the program or kind of advising for design of the program to make sure that we can think through really clearly about the context we're seeking to operate in. The next way we've sort of designed this is, I guess, at the other end of the program is around how we monitor the results of the program. So one of the key things we monitor, as has been alluded to already, is against our key performance indicator for transformational change. And within the private finance teams, transformational change often relies a lot on demonstration effects and replication effects as part of our work. And as I said, we use proxies for this. So what we've done with this report to kind of embed it in our work is when we're thinking about monitoring against that theory of change, the indicators that we're using, it's allowed us to say, well, is this indicator likely to lead to transformation on its own? Is this actually an early sign of demonstration effects? The fact that we're doing this thing, is this output that we've achieved likely to work for this particular type of investor? And it's allowed us to kind of probably gain a more accurate representation of where transformational change is or isn't likely. And that has kind of embedded the thinking slightly more in how we process programs and how we monitor and how we can iteratively kind of update programs to make sure that they're effective in the areas that we want them to be in. And it also just allows us to more accurately reflect how we're progressing against transformational change. So at a portfolio level and at a kind of individual program level, it gives us a better idea of where we're likely to be successful and where we're not likely to be successful. And again, that contextually deep realist approach to it has allowed us to really usefully specify where those mechanisms might be enacted or not. And then finally, it's about embedding it at like a slightly more portfolio level. So because this was a portfolio evaluation and because it went across all those different areas, it's got that generalizable element. And when we're thinking about having a theory of change, both for the private finance teams and for ICF more widely, we've been looking to embed those findings within that and make sure that it takes into account the sort of the ways in which this program has added to the evidence base around where demonstration effects are successful. So from our point of view, it's been really useful to have this realist framework, and it's been really saleable, and it's been really really productive as a way to kind of expand the evidence base and to make sure that that evidence that we can collect can be translated across. I thought it'd be worth really briefly mentioning a couple of the challenges we've had. So as has already been alluded to, the Itad team did a really good job of making sure that this report was not too technically phrased or that the language was not too complicated. But it's something that's always worth reiterating, that when Owen and I and others have been communicating to our teams, we've been really careful to sort of couch this in language that's relevant for the program teams, because I think sometimes we, or I certainly, forget what it is that we as evaluators know that perhaps other people don't know, in both in terms of jargon and methods, and so communicating that across is important. Especially I think to policy teams sometimes or program teams, especially senior program leads who may be more used to quantitative indicators, there can be a challenge communicating those more qualitative findings in a way that replicates the impact that what they feel to be the robustness of quantitative indicators has. But as Owen said, we're really well integrated with the teams, which has given us an advantage in communicating those methods, because we have a level of trust in our methods and our trust in our evaluation of methods. So that's been helpful. But it has been useful to kind of to bring home again why the context is useful and why the context adds value. What this report has allowed us to do really well is demonstrate the additional value that context adds. So I think that's sort of it from me in terms of how we've used this specifically within the teams. So if I could hand back over to I think Philippa for Q&A.
Thanks, Callum. Really nice explanation of the use side as well as the outline given by Charlie. So conscious of time, we've got about 20 minutes. I'm going to start to work through the most highly voted questions. So let's kick off with probably for Charlie and maybe also for Owen. If you had to do the evaluation again on a shoestring budget, what elements of the approach would you prioritise?
Well, thanks, Greg. Greg was one of the team working on this, and so he's continuing to give me a headache. Thank you. So I think the real core of it was the realist interviews and the realist synthesis. So the interviews with investors and with and replicators, and the way that was then used in the realist synthesis. So that would be the absolute priority. To get to that, I think we had to do much of the work we did in phase one over the document review and the interviews with SROs and implementing partners. So I think they would be the absolute priorities for me.
Owen, anything?
Yeah, very quickly. I mean, I'm not sure there's too much I can add on that because I think that's more of a question about the process of doing the evaluation. I mean, I suppose the stuff that was particularly useful for us was, as Charlie said, that stuff around, it was very specific in terms of the robustness of the evidence and the recommendations. That side of it was really helpful for us, but that's not really. So what I would say is we wouldn't want you to skimp on recommendations and learning if you had to cut something, because that side of things is really helpful.
Thanks, Owen. And next question, how did you define the context in CMO chains meaningfully for multiple programs working in multiple countries? Charlie.
Yeah, that is a techie question, isn't it? I'll try not to be, we're techies together, so I can be a bit techie about this. So the approach we took was we looked at outcome patterns to start with. And then we said, okay, why does this happen in this way here, but in that way there? And we tried to tease out what it was about context that meant that this outcome was happening in this way, say in one program in a particular country, but a different program caused it to happen in a different way in that country. And then in another country, it was working in a completely different way. So a lot of the power in realist synthesis is about that, is that comparison between different contexts and asking that question, well, why is it working like this here? What's different about this? And why is it working like that there? So we didn't, while we started off with hypothesized contexts, they almost all ended up in the bin. As we refined through the process, we understood the contexts more deeply, and the tendency was they got more granular as we went through, because we could be more precise about what it was that was causing this to happen here in this way. I think that answers the question.
Thank you, Charlie. Next one, could you quickly explain what question theory is?
Yes, I guess that's for me as well. So question theory is basically taking the question you want an answer to and saying, what is the sort of implicit theory of change in that question? So we wanted an answer to how demonstration effects work, in what context, blah, blah, blah. So what we did was we started with, we developed a theory of how demonstration effects might work in those contexts as our initial theory, which we then tested through the research and analysis process. Philippa, do you think that was clear enough, or should I go into that more?
No, I think that was helpful, Charlie. Thank you. Next question, was there a reason you chose to focus on demonstration effects rather than a broader set of interventions, for example, focus on enabling policies, project preparation, credit enhancement, and risk sharing? Maybe perhaps Callum first on this, because he so highlighted the importance of demonstration effects.
I'm really sorry, I missed some of what you were saying. My connection dropped out slightly.
Callum, do you want me to come in?
Please, sorry.
Philippa, I think your connection is sometimes a little bit fractured. So I think I missed a few bits there. But and the general point was why did we focus on demonstration effects rather than there was some alternatives you just listed. I mean, there's three reports which did focus on different themes. So the PE3, portfolio evaluation 3, was about policy change. I think it was just that, I mean, demonstration effects is a theory which underlies most of our programming, and not most of our programming, sorry, a significant chunk of our programming. And it's, so it has quite significant implications, really. because a lot of the transformations that we sort of expect to have and that we need to have, I suppose, for ICF to do what it says on the tin kind of thing, rely on some form of demonstration effect. So it was just seems really fundamental to me that we have a good, a really good understanding of the evidence. And I think at that point when the evaluation was commissioned, I don't know if Charlie would have anything to say on this because I wasn't there, but my understanding is that it was still relatively new, and demonstration effects is sort of used elsewhere in development and in other sort of areas, but hadn't really been examined for the ICF, and the evidence based on demonstration effects generally was, relatively limited.
Yeah, I would concur with that. Basically, it was perceived to be important, and there wasn't a great deal of knowledge about it, and therefore an important place to put some effort.
Excellent. Did the evaluation explore the for whom aspect of realist evaluation? Was it possible to produce any insights on beneficiaries of the evidenced outcome / impact? What difference has the leveraged private finance generated for the poor, women, vulnerable groups?
Yeah, I can have a first stab at that. Good question, but we were stopping at the point where the private finance was mobilised. So we were looking at, has finance been mobilised? Did demonstration effects help to cause that? We didn't then dig into what was the effect of that finance on different groups. So for us, for whom meant for what type of investor, rather than for what type of beneficiary of the investment.
Yeah, just to add on that, I think with sort of Bayes ICF, times it's all ODA money that we're spending, and so clearly the beneficiaries of that, that's really a really important consideration. But what Bayes ICF focuses on is climate change mitigation, and so a lot of what we end up evaluating is sort of at a slightly higher level, I guess, than beneficiaries, which I think perhaps is a limitation, and we perhaps need to think about reflecting that a bit more. But so as Charlie said, the sort of the for whom was really the kind of the financiers, the project developers, and so on, rather than sort of final end beneficiaries.
Thank you, Owen. Charlie, did you use the CMO language explicitly to define initial program theories, or did you leave CMOs only to present final results? My intuition is starting with explicit CMOs, even if they're still ambiguous, helps researchers throughout data collection and data analysis processes.
Agree entirely. Yeah, we started with CMOs then refined them as we went through. And for a realist approach, I think that's necessary if you're going to call an approach realist, is to have CMOs central to the theory at all steps.
Were you able to gather any evidence on how important the demonstration effect was on investor choices? Was it ever pivotal?
Me again?
It might be for you, Charlie. I think this is about the actual.
Yes, that was. We gathered evidence about the influence of the demonstration effects on the investor choices, and then we used process tracing to establish how strongly demonstration effects had contributed to the investment decision. So when you look at the report, you'll see there's we've been able to report on the amount of private finance that was actually mobilised through demonstration effects in the programs we looked at, and we can split that between where there's kind of strong evidence for demonstration effects making an important contribution and weaker evidence for demonstration effects. We haven't, it's not like doing a sort of experimental or quasi-experimental evaluation as I think Antonia said at the beginning. Yeah, we're not looking for a black or white, did this cause this? We recognise there are sort of multiple contributions, but we have been able to tease out, yeah, I guess pivotal is quite a good word. I don't know if I'd go as strongly as that, but yeah, how strong the influence was. Take a look at the report.
Can you give a practical example of something working one way in one country and in another way in another country?
I'm not sure I quite understand that in terms of presumably in terms of the demonstration effect itself. There was the case studies, the country case studies, Charlie, wasn't there? I don't know if they showed a kind of, a contrast or...
Yes, certainly in the countries we looked at, Indonesia and Uganda, and the demonstration effects in Uganda had been very much about developing the enabling environment. So they'd been used mainly by policymakers and by the electricity regulators to develop the enabling environment. Whereas in Indonesia, it was much more investors picking up evidence from demonstration projects in other countries that they could then apply in Indonesia. So there were different things going on in different countries, but I think we found the distinction more to do with types of investors. So we found that the demonstration effects, for example, were used by banks differently than fund managers or institutional investors might use them. So that was quite a strong distinction that came out of this.
Okay, then another methods question. Could you explain how you combine process tracing and the realist approach? What benefits were there in combining the two?
Yeah, basically we used the process tracing to assess the evidence that we had for the realist approach. So effectively, the realist thinking is that specific contexts trigger mechanisms which then generate outcomes. So we were using process tracing to test the evidence for those links within the realist approach. So how strong is the evidence? How confident are we that these contexts trigger these mechanisms? And how confident are we that these mechanisms generate these outcomes?
Thank you, Charlie. Coming towards the end in almost perfect timing.
Find some for Owen now.
Have you looked into developmental evaluation approaches, which works with targets as well as other stakeholders to have evaluators accompany the change?
Sorry, can you read that again? I didn't quite understand that.
Have you looked into developmental evaluation approach? Maybe that's, let's just start with that. Do you work with
I can talk about that.
Sorry, Charlie, I'm not sure I quite
no, it's okay.
know enough about that.
Yes, I'm a real fan of the idea, the sort of certainly the principles underpinning developmental evaluation, and I think realist evaluation sits very closely and very well with that. It wasn't suitable in this occasion because it wasn't as if there was one intervention that we were tracking and evaluating as we went. You know, we were drawing on the richness of the ICF, which where interventions were at all different stages. So I think it would have been quite hard to use a development. I'm not sure conceptually how we would have used a developmental approach there, but I think yes, if you're alongside a particular intervention, then that whole developmental approach and working, the evaluators and the implementers very closely together, I think is really valuable.
Thanks, Charlie. Did you develop the CMOs with policy colleagues? If so, how easily did you manage this? And do you have any learning about how to best engage non-analysts in the development of CMOs?
That's definitely for you, Owen.
Charlie's trying to Did you develop the CMOs with policy colleagues? I mean, did you develop the CMOs with policy colleagues, Charlie, at that point?
Yes, we did. Yeah, we did.
Okay.
And I think one of the things that was very good was the way it was structured within HMG was there were evaluation leads on the steering group for the evaluation, but also policy colleagues on the steering group, and they were really very active. They gave a lot of time, and sort of all credit to the evaluation colleagues for sort of managing to persuade them to engage and keep engaging, because that really added value and made a huge difference.
Yeah. So just on the point about steering groups, I mean, you know, it is good practice to have a steering group for each sort of large evaluation, you know, evaluation really, but certainly a large scale one like this. And that steering group, we do, you know, want that to include policy officials and evaluators, and, you know, a reasonably broad array of seniority of policy officials as well. So yeah, I mean, that is sort of, you know, good practice, I suppose. And in terms of, I guess, the language of CMOs, maybe, I think that was sort of part of the question, whether that's, you know, how you communicate that in a way which is less technical. I don't actually have any experience of doing that, but, you know, Callum, you were talking a bit about using more kind of simple language for this sort of thing. I mean, I think a lot of people I find are familiar with the idea of outcomes, obviously, because we talk about that in log frames a lot of the time. I think mechanisms as well sort of intuitively make sense to people, but I don't know if you have any experience of talking about it in perhaps slightly different ways.
Yeah, so I think you're right, Owen. I think that the way that I would talk about it, or have experience talking about it, and it is limited, the experience I have of it, but it's about framing it in either terms that are familiar to people who use log frames, or terms that are familiar to people who use theory of change, because in some ways it can be quite cognate to those, right? While the language is slightly different, that kind of, we think that we can, you know, this input will lead to this output, will lead to this outcome with under these particular contexts, is a kind of a way that you can explain to people when they'll gather it. So that's how I would kind of translate it back in, especially because in our case, when, or in my case at very least, when I'm trying to utilize the evidence that we've collected here, I'm trying to use it to affect things like the theory of change and things like the log frame. So communicating it within that set of language can just kind of bring it, both makes it useful to the people you're working with and makes it clear what you're talking about to them, I think.
Yeah, I think a theory of change, I mean, we talk about context in the theory of change, and, you know, most program leads have either developed a theory of change or, you know, have some involvement with their theory of change, and if they haven't, they should have done. So sort of one of those areas where it's quite a, you know, an obvious way to I guess, build the connections there.
Thank you, Owen. We are now sort of up to time. There are a few questions left outstanding. Apologies for that. But if you want to follow up with us and the team, do let us know. And Nora put up the link to the report in the chat function, and is, I think, about to put up a final slide with the link to the technical report for those of you who are interested. So it only goes for me to say thank you very much to all of you for listening, asking questions, engaging, and to all of our presenters, to Antonia for opening, to Charlie for presenting. Thank you, Charlie. And Owen and Callum, thanks so much for giving your perspectives too. Have a good afternoon, everybody.
Thanks, Philippa.